A short update on a concept we worked on today by representatives of Federal Justice Belgium out of the Palace of Justice in Ghent. But the deal, the you could call it a deal. The deal will be managed out of the Federal Department of Justice, the Department of Government. What we have on the table is something interesting. Something interesting. Uh, you know, you all may know it's kind of an easy assumption that people default on that. People default on that. So what happens is people try to recover their investments or reduce their losses, and companies file for Chapter 11 protection, so things like that, and the liabilities of companies and their holdings need to be managed. So a company defaults in totality. A company defaults on that is presents a sizable opportunity. So so you default on that directly or indirectly. You default the company. That is indirect default because the debt outstanding, or that this specific structured debt is at risk of default. It will not be serviced. It will not be redeemed. So what we have here is companies presenting themselves to the applicable courts in Ghent. It is the Kamer van Koophandel. They settled, bankruptcies known in the U.S. as Chapter 11. Chapter 11 protection, as we know from literature, is things could come to a standstill. People who have um, outstanding debt and they do not see their rights met. They can be serviced to a certain extent. They can be serviced. So you come with your balance sheet with a default. That's to say default on that, and you end up in a courtroom. A courtroom eligible to preside on the specific issue. That is a specific issue, and they look how to unload the assets and service the company's dues in case of a default. But default on that implies poor conditioning also. Otherwise you would just pay what you owe. So what we have the intention to do is when these things, these that products go up for sale, so people who have rights see their rights in totality serviced in case of a default. That can be redundancy packages for employees, so that is said to be traded from somebody who is owed to somebody who owes. So the debt is traded. The issue is the debt with delinquency is more often sold at a huge discount. There are possibilities with our specific niche quantitative elements to make a superior assessment of assets and liabilities and price the debt instead of liquidating the debt. So straight away you eke out additional margin. So what the niche aspect is, you look in this specific case, it's on auction. That to come on auction, you look for a certain sizability. Some would be interested in smaller firms with smaller, that load outstanding. But let's just say you appeal to a certain sizability, and you can eke out a nice profit if you apply novel methods, quantitative methods. If you use your ecosystem, in which we have potential purchasers. I do not need to tell you whenever the opportunity arises, a certain product is that more interesting for a certain buyer. So we have that network. So we're working on this deal. We're committed. So this is the third deal we have, conceptualized that is stands to be finalized. So we have two more deals to deliver before we venture on. So, Belgian Federal Justice indicated the sizability of the volume is plenty sufficient in terms of their capabilities. So, we want to point out this sector specific thing, very important, people who owe or are owed are serviced better because they do not lowball on liquidating assets. So, we have also, people with a private equity approach, you know, we, they make the assessment based on, the company being in trouble. And in certain cases, they can, work around the turnaround plan and make sure the company is all right and all rights holders are reinstated. The Belgian government finds that to be an interesting niche because nobody waits for businesses to go belly up, and everybody who invested into them or lent money to them to incur losses. There is also a social benefit, societal benefit, but we estimate it sizably to be an impactful business, a sizable business, and also opportunities in terms of sizability and opportunities for specific parties like private equity who send in people, you know, to re-engineer the firm to being troublesome to performing eventually well, and everybody is secure in their rights and their liabilities. So we consider the third concept to be finalized, and because we have some very industry savvy people around the table. Ken Griffin from Citadel Securities indicate this venture is known, but nobody wants to trade off in the way that Belgian Federal Justice or Ghent Palace of Justice wants to trade off. So we're kind of living off of our reputation.